Good morning everyone, welcome to another episode of the Mizuho Week Ahead. I'm Boon Heng, market economist at Mizuho Bank. This week's theme is roller coaster ride. Last week was another roller coaster week. Last week started with Trump delaying 50% tariffs on the EU to the 9th of July. US Steel and Nippon Steel deal also renewed hopes for a trade deal between US and Japan. Hopes were further boosted as PM Ishiba and Trump held a call on Thursday, with Ishiba stating that he could visit the US before the G7 summit in June and they will collaborate to build a win-win relationship. Exuberance for the dollar reached a peak last week as US Trade Court ruled that Trump's tariffs imposed under the International Emergency Economic Powers Act was illegal. Subsequently, this ruling was temporarily blocked by the Federal Appeals Court, which now provides a schedule to June 9 to simply decide on the request for a longer-term stay on the ruling. The dollar was sent reeling with the DXY plunging back towards 99. Meanwhile, despite President Trump pressuring Fed Chair Powell to lower rates by stating that it puts the US at an economic disadvantage, the Fed continues to hold firm as their official statement stressed that decisions will be made solely on careful, objective, and non-political analysis. Late week optimism was further dampened as Treasury Secretary Scott Bessent said that US-China talks have stalled a bit and a Trump C call would help. Trade woes rose as US President Trump said that he will be raising tariffs on aluminum and steel to 50% from 25%, and separately, he also said that China violated their agreement in Geneva and will need a call with Xi to fix things. Down under, Australia headline CPI for April stayed at 2.4%, while trim mean inflation edged higher to 2.8% but stayed within the RBI's range. Underlying details of continuing goods disinflation on the back of softer fuel pricing, offsetting rising services inflation, call for a calibrated approach to RBI easing. In Korea, the BOK proceeded with the 25 basis point cut to support growth amid a significant downgrade to 2025 GDP growth projections from 1.5% in February to 0.8% at this meeting. Notably, the BOK warned of FX volatility from wider Korea-US rate differential due to a slower pace of cuts by the Fed, even though FX pressures have eased recently. Even as 4 out of 6 members are open to another cut in the next 6 months, and Governor Rhee actually said he is open to bigger cuts, he cautioned that rates are unlikely to fall below 2% in the short term. In Malaysia, resignation of the Economic Minister and the Natural Resource and Environment Minister sparked worries about political instability after a rather prolonged period of calm. For the upcoming week, the ECB is expected to ease with caution as most ECB members display dovish inclinations and inflation remains palatable. In India, we expect RBI to cut rates by 25 basis points as demand remains undermined by stretched households as well as restrained business spending. In Korea, elections will take center stage on the 3rd of June with the Democratic Party's Lee having a double-digit lead in approval ratings. Barring significant uncertainties over these outcomes, Korean won movement will defer to broad dollar trends. Meanwhile, we expect Australia's Q1 GDP to remain at around 1.3% year-on-year, which still represents a slowing in sequential growth momentum. Real retail sales remain weak, while external demand remains decent, but absent clear evidence of front-loading observed in Asian peers. All in, markets are not off this roller coaster ride yet, and excitement over upward progress should be wary of frightening falls. For more information, please refer to our week ahead publication or contact your respective sales desk and RMs. And for regular notification on our market views, please subscribe to our channel and hit the notification button. Thank you.